With so much noise and so many different ideas surrounding the Australian property market at the moment, Simon and I decided to sit down and look at what Australia's leading analysts and researchers are predicting for the coming 12 months. Now, what we found interesting is not only some markets are expected to absolutely crank, but all 8 of Australia's capital city markets, according to all 3 of those leading analysts, are expected to grow in the coming 12 months. Now, each year, one of my favourite pieces of information that I buy is the SQM Boom and Bust report. So these guys generally create an incredibly detailed report with 4 central scenarios. Now, we've actually just moved into scenario 3, which is their best case scenario in the coming 12 months. And that was an early interest rate cut this year, as well as strong population growth. So when we look at the different capital city markets around Australia, what can we expect according to SQM?
Out of all 3 of the forecasts that we looked at, SQM definitely had the most bullish and most ambitious forecast for the Australian property market, with Perth, Adelaide and Brisbane continuing to lead the charge for the rest of the year. Now, according to the report, they believe that Perth property prices could rise by 20% throughout the year of 2025, with Brisbane going up potentially 16% and Adelaide up by 14% in the calendar year. They're also expecting Sydney and Melbourne to have a really strong finish to the year, with Sydney property prices ending up 7% by the end of the year and Melbourne by 6%. Now, the smaller capital cities of Darwin, Canberra and Hobart are all expected to continue rising for the rest of the year, with Darwin being the strongest performer of the 3 markets by going up 10%, Hobart by just 5% and Canberra by maybe 6%. So across the board, every single capital city seeing price growth, and 4 of the 8 capital cities expected to experience double-digit price growth this year.
So like you said, Simon, SQM have some bloody big expectations for this year. And to be honest with you, I don't think the predictions are going to be that strong for this year. I think with Perth, Adelaide and Brisbane in particular, we can see all of those markets sliding month on month when you look at the CoreLogic data. And I think it could be more like a 10% year in some of those marketplaces, with obviously individual winning suburbs and markets across the board. Now, when we look at Domain, one of Australia's leading data analysts and aggregators of property information and data, what are they predicting for the 25/26 financial year?
Yeah, what's interesting when we look at the Domain forecast is it seems to be more in alignment with the month-on-month data we're seeing coming out of Cotality at the moment. So they've got Sydney leading the charge in the 25/26 financial year, going up by 7%. Obviously, we know Sydney and Melbourne are both influenced by interest rate cuts or interest rate rises. So both of those markets are expected to go up really sharply. Melbourne by about 6% over the 25/26 financial year. After the 2 big metro markets, we're followed by the next 2 largest capital cities in Australia, which is Brisbane and Perth, which are expected to record a 5% growth year. And finally, Adelaide and Canberra, which are expected to go up by 4%.
You know, for me as an investor, I know a lot of people out there are always chasing huge bucks and big returns year on year. But in reality, if you were to go out there and buy a 500k property today, and that property was to go up just 5% per annum over the next 15 years, your $500,000 asset would now be worth $1 million. So you don't need every market in Australia to be absolutely smashing it and hitting double-digit numbers every single year to have a successful journey as an investor in Australia. Now, if we have a look at the predictions or the forecast from KPMG, one of the world's largest global consultancies, between the 25th of December or Christmas this year and Christmas next year at the end of 2026, what are they saying about the Australian property market?
Interestingly, the data from KPMG is not too dissimilar from what we've seen from Domain, although they like to get a little bit further, putting it into the decimal points. So Sydney once again expected to lead the charge at 7.6%, with Melbourne following at 6%. They're also expecting Brisbane to go up by 5.6% and Perth by about 4.6% over that 12-month period, with the expectations of the smaller capital cities expected to go up by about 2.5% in Darwin, up to 3.6% in Adelaide. So not seeing as much growth compared to the bigger capital cities, but still really nice to see that all 3 of these economists and analysts are predicting property prices to continue to rise. Now, there's a number of different reasons as to why the expectations are so bullish and why all of these forecasters believe that property prices are going to continue moving in the green. But let's break those things down. So what are some of the major reasons, or why do we feel as though property prices could continue heading in this direction?
Now, obviously we could say that it's a result of a whole bunch of things, and in a moment we will go through each of those things. But at the end of the day, at this stage in the longer term real estate cycle, everybody's just ready for a little bit of speculation. And I think a lot of what's actually going to drive property prices up in Australia over the coming 12 months is a result of interest rates going down, people's optimism or sentiment beginning to improve, and people just wanting to make a little bit of money without doing anything for it. But if we pretend for a moment that real estate in Australia is anything but speculation, there are also some fundamental reasons why things could go absolutely off in the next 12 months. Now, the first one is the fact that the Australian government right now is allowing over 500,000 people to come in from overseas, which is massively spiking the Australian population. Now, according to the ABS, as many as 160,000 of those people are finding themselves into Melbourne, about 100,000 going into Queensland, and somewhere between about 130 to 140,000 of those people finding their way into New South Wales right now. Now, that's in alignment with Michael Matusik's analysis of the long-term Australian market, which suggests that 75 to 82% of Australia's future population, job, infrastructure, and income growth are going to be spread between basically the Sunshine Coast, Brisbane, Gold Coast, Sydney, and Melbourne markets over the longer term. Now, what this population growth is resulting in, which in a post-COVID market where not as many homes are being built because it's so expensive to build them, is an imbalance between supply and demand. Now, we can actually see this in the data across Australia's vacancy rates, where the vacancy rates in almost every market in the country, according to CoreLogic in the last month, are below 2%, with many markets including Brisbane, Perth, Adelaide, Hobart, and Darwin recording rates at just below or just above the 1% mark. Now, what's even more interesting for me to see is the vacancy rates and how they're coming down in Sydney and Melbourne at the moment as that population continues to grow. Now, this will have a twofold effect on property prices across Australia. As the vacancy rates come down, it puts more pressure on rentals. And like we've seen in Perth, Adelaide, and Brisbane in the last 5 years, when the rates hung around that 1% mark, we saw rents in those cities go up by between $100 and $200 per week. Now, on top of this, when you look at the long-term trend between vacancy rates on a graph versus capital growth rates, in those cities where vacancy rates come down and people continue to move in, it puts pressure on house prices as well. And we generally, according to CBA Bank, see a corresponding increase in house prices as well. So between the population increasing and the supply and demand imbalance in Australia, there are some very, very strong fundamentals that will have a positive influence on property prices across the country in the next 12 months.
That was a really long-winded way to say that there is going to be more demand than there is supply. Economics 101, Ben's going to be the lecturer at Sydney University next year. But look, I love the deep dive into it because I think all of these issues do have context and it gives us a reason as to why property prices could rise. But another reason is the unemployment rates have been super low, below 5% across the country for many, many years now, and that isn't expected to change. Fortunately, there are so many job opportunities out there at the moment, which means people have access to earn, and if people have access to earn, they've got access to spend as well, and we know how to do that really well in 2025. And I think the most obvious one is just declining interest rates. For the last few years, we went through that extreme interest rate rise period where we saw property prices in Melbourne, in Sydney, in Canberra, in Hobart, in many parts of the country actually decline in value. Now, what was interesting is the national average kept going up because obviously Brisbane, Perth, Adelaide were propping up all of the other markets around Australia and performing really, really well. But now we've seen the beginning of the interest rate declining cycle, which is as close to a silver bullet in Australia that you can really get, because if you look at the last 50 years of interest rate cycles, whenever they're going down, the national average of property prices is always going up. Now, I feel as though Sydney and Melbourne are the two markets that are the most impacted by interest rates. Obviously, with those markets having so many areas with such expensive property prices, even a small decline in interest rates really positively impacts those markets. So as of recording this video, we've seen a 0.5% decline in the interest rate. And with the expectations of CBA, NAB, and Westpac are all indicating that by the end of 2025, we'll see another 0.5 cut in the cash rate, which is going to look like a full percentage drop in the cash rate for the 2025 calendar year. Now, what we found really interesting is when we've looked at previous interest rate cuts of up to 1% in a single calendar year, what's happened the following year is property prices have risen quite substantially. Now, There was an article from CoreLogic that indicated the national average has historically gone up by 6% following a 4% drop in the cash rate. But another article indicated that property prices could rise by 15% the year following a 4% drop in the cash rate. So looking at the forecast and then looking at where interest rates are likely to head, it gives us some confidence that property prices are going to increase in value over the next 12 months.
Now, according to some of our friends like Phil Anderson, who wrote the most incredible book, The Secret Life of Real Estate and Banking, or Akil Patel, who recently published a book called The Secret Wealth Advantage, I highly recommend you guys go out there and check them out. The next stage of the longer term real estate cycle is what we call easy credit, or as Simon said off camera, loose lending. And effectively, this is where things are sort of getting expensive in a couple of markets around the country, and the banks start reducing their servicing limits from the last GFC. Now, we've just seen this literally in the last week or two in America, where all of the responsible lending standards and the national lending standards that they put in place post the last GFC have all been rolled back by Trump, which happens at this particular stage of every single cycle, so we can squeeze a little bit more juice out of the top. But in Australia, they're absolutely doing the same thing. So more first home buyers grants, more building boosts, lower interest rates, easier servicing limits. A lot of that stuff that we heard back in 2015 through at about 2023 in Australia around the APRA and the responsible lending stuff is slipping away. We're seeing a lot more trusts being set up now, companies being set up, looser lending standards, as well as self-managed super funds being set up. And all of that on top of the people coming in from overseas is going to create a little bit of fire in the marketplace over the coming 12 to 18 months.
Now, whilst all of these things that we've talked about today are adding some fuel to the Australian property market's fire, at the end of the day, nobody can predict the future and nobody really knows what's coming next. But we absolutely love following this information and diving deep into the data to see what some of Australia's leading economists, analysts and forecasters are predicting. And even when we see every single capital city in Australia looking like they're going to continue increasing in value over the next 12 months, not all property markets are considered equal. You really have to look back into the longer term history of how these property markets have performed and obviously look at what's to come next in terms of population growth, in terms of infrastructure growth, in terms of job opportunities and increases in wages. And obviously, is there any big event coming at any time in the future, like in Brisbane, the Olympic Games in 2032? So even though all markets are looking pretty strong, what are your favorites?
For me personally, I've just got approved to buy something in my self-managed super funds. So I'm going to take that money straight into the Melbourne property market. I like North Melbourne, I like West Melbourne, and I like the southeastern beaches of Melbourne down there on the Mornington Peninsula. But that said, I also love the Brisbane market at the moment. There's some incredibly good quality areas on the northwestern side of the city called the Hills District. Obviously, South Brisbane looks extremely good for duplexes or granny flats like you've just done. Otherwise, the southern or the northern beaches in Brisbane are significantly undervalued as well. So I like Brisbane and Victoria at the moment. They're my two picks because of the vacancy rates, the population growth, the sentiment. As you said, Brisbane's got the Olympics and Melbourne is just statistically dirt cheap right now and at the bottom of an 8-year low. And I think they're the two favourites for me. And I will say there is one other market that's got massive potential with a big asterisk. I personally wouldn't own this market just because of the risk, but Darwin looks phenomenal. From a 10-year average growth perspective, it is the most undervalued market in the country right now. It does have very, very low vacancy rates, very, very cheap house prices and very high rents, and it is massively undersupplied at the moment. It's kind of the only market in the country that actually still looks like this. A few years ago, the fundamentals in Townsville looked the same, and since that time, house prices have almost doubled up there. So Darwin's about to go through a good run as well. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom. Now this will have a twofold, and the market's just at a real stage. Oh my gosh.
But I'm glad we got this one out of the way first.
Really choked through this one today.